Welcome back, everybody, for another deep dive. First up, we're talking education. Addis Ababa is rolling out some pretty big changes to how kids are being assessed in school.
Yeah, it's a big overhaul. They're moving to this new system, a standardized continuous assessment system. It's being implemented in all schools, public and private.
So no more just relying on big end-of-year exams.
Well, not entirely, but the focus is shifting. So the idea is to create a more consistent and fair way to evaluate students.
Makes sense. Level the playing field a bit. But what does that actually look like in practice? How are they changing things?
So the way it works is the weighting given to different types of assessments changes depending on the grade level.
Okay, so different strokes for different folks, so to speak.
Yeah. Like for the younger kids, grades 1 through 4, continuous assessment, like classroom work, participation, quizzes, that kind of thing, will make up a whopping 90% of their final grade.
Wow, 90%. That's a lot.
It is. Final exams are only 10% then. But then as they move up, through middle school and high school, the weight of the final exam gradually increases.
So it's like a gradual shift towards that traditional exam model.
Right. But the continuous assessment is still a big part of it, and there's also a bigger emphasis on practical work across all grade levels.
I like that. More hands-on stuff.
Yeah.
Sports, internships, field work, that sort of thing.
Exactly. The idea being to, get kids more actively involved in their learning. And a lot of education experts are on board with this approach, by the way.
Yeah, I was going to say, it seems like that kind of hands-on learning and focusing on things like teamwork is pretty widely seen as a good thing.
It is. But, the real world is messy, right?
Yeah.
And putting such a big change into practice, it's not always smooth sailing. School officials are already talking about resource constraints, like not having enough classrooms, labs, and equipment, all the things you need to actually make this work.
Yeah, I could see how that would be a problem. I mean, you can't exactly do a great lab experiment if you don't have the lab.
Right. And it's not just the physical stuff either. Teachers are feeling the strain, too. More individualized assessments mean more work for them,
Grading, feedback, all that.
Exactly. And think about it. Class sizes in Addis Ababa can be huge, like 60 kids in a class. So that's a lot of individual assessments for one teacher to handle.
Yeah, that's a recipe for burnout. And I imagine it also makes it harder to give each student the kind of personalized attention that continuous assessment is supposed to be all about, right?
Exactly. So it's a mixed bag, good intentions, but the reality on the ground is complicated.
So are there any schools that are feeling good about this, despite the challenges?
Some, yeah. The schools that have already been investing in teacher training and, getting their resources up to scratch, they're cautiously optimistic.
They're like, we're ready for this.
Yeah, sort of, but there's also a lot of criticism about how this reform was rolled out.
Like they rushed it?
Big time. No pilot phase or anything, just bam, new system for everyone.
Oof. Yeah, that seems like a missed opportunity to test things out first.
And iron out the kinks, exactly.
And then there's the question of, well, how do you actually measure academic integrity in a system that's so focused on ongoing assessment?
Right. And one expert actually raised the point that, a lot of continuous assessment involves group work, which, great for teamwork and all, but it can also make it harder to assess individual performance. Like, how do you know if everyone's pulling their weight?
Yeah, it's easy for someone to coast along on the work of others.
Exactly. And then there's the question of, well, does Ethiopia have the right environment for this kind of system? Like, do they have the same level of parental involvement, alternative assessment methods, that kind of thing, that you might see in other places where continuous assessment is working well?
So it's not just about copying a system, it's about making sure it actually fits the context.
Exactly. And you know what else is interesting? There was a study done in the Yeka district, right, in Addis Ababa, that looked at how continuous assessment is being done before this new system came in.
Okay, so before the big change, how were things working?
Well, not so great, to be honest. They found all sorts of issues, like documentation wasn't thorough enough, feedback to students wasn't consistent, communication with parents was lacking, even the way student work was reviewed in the classroom, it wasn't systematic enough.
So even where continuous assessment was already happening, there were cracks in the foundation, so to speak.
Yeah, exactly.
So it seems like a pretty big task ahead. But the government's saying they're committed to monitoring this closely, right?
They are. And they're also saying they're committed to tackling the existing disparities between public and private schools.
That's good, trying to close that gap. But was everyone on board with this whole standardization push?
Not everyone. One expert actually argued against trying to homogenize education. Like, their point was, why not have policies that are tailored to the specific needs of different communities and schools?
Yeah, a one-size-fits-all approach doesn't always work.
Right. And this expert also said that, changing the curriculum too often, especially based on trends from other countries, can actually be disruptive. Like, sometimes you need to give a new approach time to settle in before you can really judge if it's working or not.
Okay, so lots to think about with these education reforms. Now, total change of gears here. Let's talk trade. Specifically, Ethiopia's been trying to join the WTO for a while now, right?
A long while. Since 2003, actually. So, yeah, it's been a long road. And alongside that, they're also working on a brand new national trade policy.
Wow, after all this time. So why now? What's driving this push?
Well, it's all about becoming more integrated into the global economy, right? Gaining better access to international markets, attracting foreign investment, all of that.
So opening up, becoming a bigger player on the world stage.
Exactly. And they've been laying the groundwork for this for years, overhauling their foreign currency system, setting up a capital market, restructuring state-owned enterprises.
So they've been doing their homework.
Yeah. And now they're really stepping things up. They've started negotiating trade deals with a bunch of countries. They're working on a new tariff book.
Tariff book?
Yeah, it's basically a list of taxes on imported goods. And this new one will make it easier for Ethiopia to participate in the AfCFTA, the African Continental Free Trade Area.
Okay, so smoothing the way for more trade within Africa as well.
Exactly. And businesses are already seeing improvements, by the way. Getting licenses faster now, less bureaucracy, that sort of thing.
So it's got to be good news for entrepreneurs, right?
Definitely. But, with big changes like this, there are always potential downsides too, right?
Like what? What are some of the challenges Ethiopia might face?
Well, one thing that's been raised is the need for more technical expertise. Negotiating trade deals and implementing all these new regulations. It's complicated stuff, requires specialized knowledge.
And are they worried about, domestic industries getting overwhelmed by competition from abroad?
Yeah, that's definitely a concern, especially for industries that are still developing. Can they compete with bigger, more established companies from other countries?
And what about jobs? Are people worried about jobs being lost?
Yeah, there's that worry too. The Confederation of Ethiopian Trade Union, they've been particularly vocal about that.
Makes sense. Big economic changes always come with those anxieties.
Right. And they're also concerned about toll fees that are charged by regional states on goods that are being transported across the country. These extra costs can make it harder for businesses to compete,
Yeah, I see their point. It's like an extra burden on top of everything else.
And then there's the whole informal economy. A huge part of Ethiopia's workforce is in the informal sector.
So street vendors, small-scale traders, that kind of thing.
Exactly. And there's a lot of debate about how these new trade policies might impact those workers. Will it help them or hurt them? It's still unclear.
That's a really important point. Sometimes those most vulnerable can get left behind in these big economic shifts.
Right. And the government is very aware of all this. They're saying, look, we're committed to WTO standards, but we're not going to sacrifice consumer protection.
Okay, so trying to find that balance.
Exactly. And they're arguing that, actually not having a clear trade policy in the past has held Ethiopia back.
It's been a barrier to engaging with the global economy effectively.
Right. They're saying it's limited their access to foreign investment, technology, all of that.
So this new policy is okay, let's set the rules, let's be more competitive.
That's the idea.
So if they do manage to join the WTO, what are the potential benefits?
Oh, lots of potential benefits.
Yeah.
More foreign investment, obviously. More opportunities for Ethiopian businesses to export their goods. And more competition within the country, which can actually be a good thing.
How so?
Well, it can push companies to innovate, to become more efficient, to improve the quality of their products.
Okay, so a rising tide lifts all boats kind of thing.
Yeah, potentially. But it's not all rosy, of course. There are risks, too.
Right.
As we said, some domestic industries might struggle to compete with foreign companies. And becoming more integrated into the global economy means you're also more exposed to global economic shocks,
If there's a recession somewhere else, Ethiopia might feel the effects.
Exactly. And then there's the question of whether the benefits of these changes will be evenly distributed. Will everyone benefit, or will some regions or groups be left behind?
So it's not just about economic growth. It's about making sure that growth is inclusive and sustainable.
Absolutely. And the government says they're taking all this into account. They're planning to invest in infrastructure, workforce training, things to help mitigate those risks.
So kind of softening the blow, so to speak.
Yeah. And they're also, really importantly, they're asking for feedback on the draft trade policy. They're holding consultations with businesses, experts, all sorts of people.
That's good. Getting input from different stakeholders.
Yeah, because they know this is a big deal, and they want to make sure they get it right.
Makes sense. Okay, let's move on to the insurance industry. Sounds like they've got some regulatory changes coming their way, too.
Big time. The National Bank of Ethiopia, the NBE, they're the ones who regulate the financial sector, right? So they're introducing a new risk-based capital framework for insurance companies.
Okay, so more regulations. And what does that actually mean? Risk-based capital framework.
Basically, it means that insurance companies are going to have to hold more capital in reserve the riskier their investments are.
So, like, if they're insuring risky stuff, they need to have more money on hand in case things go south.
Exactly. It's all about making sure they can meet their obligations to their customers, the policyholders.
So if something happens, they could actually pay out the claims.
Exactly. On top of that, they're also implementing this new International Financial Reporting Standard, IFRS 17.
IFRS 17.
Catchy!
Right. It's all about making sure insurance companies are accurately assessing their liabilities and the risks they're facing.
So it's all about transparency then.
Yeah, transparency and stability. The regulator wants to make sure the insurance sector is healthy, that people can trust these companies.
And are the insurance companies themselves happy about these changes?
Well, not all of them. Some are worried about how complex this transition is going to be, especially with IFRS 17.
Like they're not sure they can handle it. Yeah, it's a big change from how they used to do things. Mm-hmm. And then, this is a big one, they're really concerned about a shortage of qualified professionals.
People who actually understand all this stuff.
Exactly. People like actuaries who assess and manage financial risk and risk modeling specialists. Apparently there aren't enough people with these skills in Ethiopia.
And why is that?
Well, it seems like the university programs that used to train people in these fields have kind of dwindled in recent years.
This is like a skills gap?
Exactly. And to make things even tougher, there's a new capital threshold that all insurers will have to meet by 2027.
So even more pressure to get their finances in order.
Yeah, they need to have a certain amount of paid-up capital, and it's a pretty substantial amount. And it varies depending on the type of insurance they offer, life insurance, general insurance, all that.
So not a one-size-fits-all approach.
Right. But the point is, some companies are really going to struggle to meet these requirements, especially with the skills shortage on top of it all.
So it's kind of a double whammy for them.
Yeah, pretty much. Tougher regulations, but not enough people who know how to navigate them.
So it sounds like the insurance sector in Ethiopia is at a bit of a crossroads.
Yeah, for sure. It is growing, though. Like, total assets, investments, equity, all of that has been going up in recent years. But it's still a relatively small part of the overall financial market, compared to the banks.
And is the central bank, the NBE, worried about this?
They've definitely got their eye on it. They've identified a few key threats. Macroeconomic headwinds, for one. Like, if the overall economy isn't doing well, that's going to impact the insurance sector, too.
Makes sense. And what else?
Well, they're also concerned about the low adoption of life insurance. Like, not enough people are buying life insurance. And then, of course, there's the skills shortage we talked about. And then there's the fact that a lot of insurers are relying on outdated IT systems.
Oh, that's never good.
Right. And then there's also a lot of price competition in the market. Like, companies are undercutting each other to try and win customers.
Not a lot of profit margin.
Not necessarily, but the NBE is trying to encourage companies to diversify their offerings, upgrade their technology, and invest in training, basically trying to make the sector stronger overall.
Smart move. And what about the insurance companies themselves? What are they worried about, apart from all the regulatory stuff?
Well, they're worried about their profits, obviously. Like, if they have to spend more money to comply with regulations and upgrade their systems, will that eat into their profits?
Makes sense.
And then there's the whole issue of liquidity. They need to have enough cash on hand to meet those capital requirements. And then there's a new regulation that limits how much money they can keep in a single bank.
So it's spreading your risk, basically.
Yeah, that's the idea. But it can make managing their finances more complicated. And then they're also looking at the agriculture sector, which is huge in Ethiopia, but also largely uninsured.
So that's like a big untapped market.
It is. But it's also risky, right? Agriculture is very vulnerable to things like weather and climate change. And then there's the low adoption of life insurance we talked about.
So a lot of potential, but also a lot of challenges.
Yeah. And then there's this whole thing about foreign insurance companies potentially entering the market.
Oh, so more competition.
Exactly. And some local companies are worried about whether they'll be able to compete.
Makes sense. It's like, are they ready for the big leagues?
Yeah. And then going back to the skills shortage, apparently a lot of people who do have insurance training end up leaving the industry and going to work in banking.
Oh, so they're losing their talent pool.
Yeah. And there are issues with the university programs too, like the curriculum is outdated and there just aren't enough qualified actuaries in the country compared to other places in Africa.
So they're behind the curve a bit.
Yeah, it seems that way. And then, there's the whole thing about millennials entering the workforce and how they might change the industry.
Like they have different expectations and needs.
Right, and there's the potential for automation, using AI and all that to do some of the work that's currently being done by humans.
So it's a lot of change coming at them from different directions.
Exactly. It's a really interesting time for the insurance industry in Ethiopia.
Okay, let's shift gears again. Let's talk about the Commercial Bank of Ethiopia, CBE. They're a big deal, right?
Huge. The biggest bank in the country.
And it sounds like they've been doing pretty well recently.
Yeah.
Big increase in deposits.
Yeah, massive increase. Like 344% higher than the same period last year.
Wow, that's a huge jump. How do they explain that?
Well, they say it's down to a few things. They closed some branches that weren't profitable, they restructured some of their account types, and they've really been pushing digital banking.
So like mobile banking, internet banking, that sort of thing.
Exactly. Trying to get more people to use those services. And it seems to be working.
And their overall financial performance has been good too, right?
Yeah. Profits are up, assets are up, capital base is up. They're even getting a financial boost from the World Bank.
Oh, really?
Yeah, but there's a catch. The World Bank money is conditional on the CBE meeting certain requirements set by the National Bank of Ethiopia, the NBE.
So it's like, we'll help you, but you need to shape up.
Exactly. The NBE wants the CBE to improve its corporate governance and risk management.
Makes sense. They're trying to make sure things are run properly.
Right. And then there's this interesting thing about the CBE's capital.
What about it?
Well, a big chunk of it is actually in the form of these government-issued bonds.
So they're holding government debt
Yeah.
as part of their capital.
Yeah, and they're pushing the government to actually pay them back in cash.
They're like, we need that money, guys.
Yeah, pretty much. They want to use that money to modernize their systems and improve their lending practices.
So they're trying to become more efficient, more modern.
Exactly. But there are some concerns being raised about this whole focus on profitability.
Like, is it too much?
Yeah, some people are worried that the CBE is becoming too focused on making money and neglecting its role as a public service provider.
So it's like, is it becoming too much like a private bank and forgetting about its responsibilities to the people?
Exactly. Some members of parliament have been particularly vocal about this. They're worried that the CBE might start neglecting areas that aren't as profitable, like rural communities or certain sectors that might need more support.
So it's a delicate balance, serving the people while also being financially sound.
Right. And there has been a shift in the CBE's lending practices. They're lending more to private businesses now.
So less focus on public sector lending.
Yeah. Which, again, raises those questions about their role and priorities.
And the CBE's also had to raise interest rates on loans, right?
They have, because the cost of attracting deposits has gone up.
So it's more expensive for people to borrow money now.
Yeah. Which can be a problem for businesses, especially smaller businesses.
Yeah, it can stifle growth if borrowing is too expensive.
Exactly. And then there's this whole issue of deposit concentration.
What does that mean?
Well, the CBE has a huge market share, right? So a few of their biggest depositors could really shake things up if they decided to withdraw their money.
Oh, so it's like they're vulnerable to a bank run.
In a way, yeah. It's a risk they're aware of.
So a lot of moving parts with the CBE. Strong financial performance, but also some potential vulnerabilities.
Exactly. A lot of analysts are saying, look, the headlines look good, but there are some underlying issues that need to be addressed.
And what are those issues?
Well, they need to strengthen their balance sheet, improve their risk management practices, and be more transparent about their governance.
So, like, be more accountable.
Exactly. And they need to be careful about how much they're relying on interest income. Like, if interest rates go down, their profits could take a hit.
Makes sense. And they're also facing rising operating costs, right?
They are. Salaries, benefits, contributions to the deposit insurance fund, all that stuff is adding up.
And they're not growing their assets as fast as they used to.
Right. Which is partly due to the tighter monetary policy we talked about.
So less money flowing around in the economy overall.
Yeah. And they're also lending out a high proportion of the deposits they have, which, again, raises questions about risk.
Like, are they being too reckless?
It's something to watch, for sure. And their capital buffer, while it's technically above the regulatory minimum, it's still pretty thin compared to other banks.
So not as much cushion to fall back on if things go wrong.
Right, and they're relying a lot on external borrowing, which can be risky.
Especially if the value of the Ethiopian birr fluctuates.
Exactly. And those investments they have in state-owned enterprises, well, those are starting to look a bit shaky too.
Because of the rising public debt.
Right. So yeah, it's a complicated picture. They're making profits, but there are some red flags too.
So they need to be careful, basically.
Yeah, and they need to remember their role as a public institution, serving the people.
Okay, let's talk about something completely different now. Bitcoin. Specifically, Bitcoin mining in Ethiopia. It seems like that's becoming a big thing.
Yeah, Ethiopia is becoming a bit of a hotspot for Bitcoin miners.
And what's drawing them there?
Cheap electricity. Ethiopia has a lot of hydropower, and that means electricity is relatively inexpensive, which is exactly what Bitcoin miners want.
Makes sense. Bitcoin mining uses a ton of energy, right?
A ton. It's crazy how much energy it uses.
And Ethiopia is just letting them set up shop.
Well, they have granted licenses to over 20 Bitcoin mining companies.
So they're embracing it.
Yeah, it seems so. They're seeing it as a way to generate foreign currency.
Okay, so that's the motivation. But are there any downsides?
Oh, yeah, definitely. Like, who's actually benefiting from this? Are the profits staying in Ethiopia, or are they mostly going to the foreign companies that are doing the mining?
Good question. And what about the environmental impact? I know Bitcoin mining has been criticized for its carbon footprint.
Oh, yeah, it's a big problem. The way Bitcoin works, it requires a lot of computing power, and that means a lot of electricity.
And that electricity has to come from somewhere.
Right. And in Ethiopia, it's mostly coming from hydropower, which, okay, it's renewable energy, but it's still using up a resource that could be used for other things.
Like powering homes and businesses.
Exactly. And some experts are saying that the amount of electricity being used for Bitcoin mining in Ethiopia is actually more than the output of some of their major dams.
Wow, that's a lot.
It is. And you know, there are other ways to do this kind of cryptocurrency thing that are less energy intensive.
Oh, really?
Yeah. There's this thing called proof of stake. It's a different way to validate transactions that doesn't require all this massive computing power.
So why isn't Bitcoin using that?
Well, it's complicated. There are technical reasons and also economic reasons. But the point is, Bitcoin mining is using a lot of energy, and that's not going to change anytime soon.
So it's something to be concerned about, for sure.
Definitely. And, you know, it's not just about the energy use itself, it's also about who's paying for it.
What do you mean?
Well, electricity in Ethiopia is heavily subsidized by the government.
So it's artificially cheap.
Exactly. And some experts are arguing that these Bitcoin miners are basically benefiting from those subsidies. Like, they're getting cheap electricity at the expense of Ethiopian taxpayers.
That's an interesting point. And they're also saying that if those subsidies weren't in place, Bitcoin mining in Ethiopia wouldn't be profitable.
Exactly. So it raises all these questions about, well, is this really a good use of Ethiopia's resources?
Right. Are they getting enough back from this to justify the costs?
And there are also concerns about the regulatory framework. Like, is there enough oversight of this industry?
Because it's still a relatively new industry, right?
Exactly. So there's a lot of potential for things to go wrong.
So it's a gamble, in a way.
Yeah, it is. And it's a gamble that Ethiopia seems to be willing to take. But whether it pays off in the long run, well, that remains to be seen.
Okay, from the world of Bitcoin to, well, something a little more down to earth. Sewage. Specifically, a growing sewage crisis in Addis Ababa.
It's a big problem, and it's getting worse.
And it seems like it's hitting residents hard. Literally, in their wallets.
Yeah, they're being fined for how they're disposing of sewage. But it's not really their fault.
How so?
Well, the sewage systems in some areas are just completely overwhelmed. Like, they can't handle the amount of wastewater that's being generated.
And why is that?
Rapid urbanization. The city's growing so fast, and the infrastructure just hasn't kept up.
So they haven't built enough sewage treatment plants, that sort of thing?
Exactly. And now the residents are paying the price.
And these fines are substantial.
Yeah, they're not small, and some people are even being threatened with having their utilities cut off if they don't pay.
Wow, that's harsh.
It is. And you know what's even worse? A lot of residents say they didn't get any warning about this.
So they had no idea there was a problem until they got slapped with a fine.
Exactly. They're understandably upset.
I can imagine. And this isn't just happening in one neighborhood, right?
No, it's a citywide problem, and it's affecting a lot of new housing developments.
So it's like the developers didn't build the infrastructure properly?
That's what the city's saying. But the developers are pushing back, saying it's the city's responsibility.
So it's a blame game, basically.
Yeah, kind of. But meanwhile, the residents are stuck in the middle.
And it's not just new developments, right? I read that some public housing projects are having problems too.
Yeah, they are. And even though the city is trying to address this through projects like the Beautifying Sheeger Project.
Beautifying Sheeger Project.
It's this big initiative to improve the city. But the problem is, funding for these projects has been delayed.
So they don't have the money to fix the sewage problem.
Not as quickly as they need to. And the reality is, Addis Ababa has a huge sanitation problem. Like, only a small percentage of the population is actually connected to proper sewage systems.
Wow, that's a recipe for disaster, literally.
Right. And you know what else is worrying? Ethiopia has one of the highest rates of open defecation in the world.
No, that's not good.
No, it's not. It's a major public health hazard, and it pollutes the water supply.
So it's like a vicious cycle.
Exactly. And, you know, a lot of experts are saying that fining people isn't the solution.
Yeah, it seems like punishing people for a problem they didn't create.
Right. They're saying what's needed is investment in infrastructure. Building new sewage treatment plants, expanding the existing systems, that sort of thing.
And education too, right?
Absolutely. People need to understand the importance of proper sanitation and how to manage waste responsibly.
So it's a multifaceted problem.
Definitely. And it's one that's not going to go away anytime soon.
This has been The Deep Dive. Thanks for listening.